Hi, Alan Henderson, Managing Director at Erskine Owen. We're really pleased to have launched our first ever growth fund with a forecast average annual return of 20% plus. Timing is everything. They say that the deal of the century comes around every week if you're prepared to look hard enough, and I think that is absolutely true. However, we think that right now is a fantastic time to be looking for value add or growth opportunities in the property sector. Let's face it, the world has changed quite rapidly. We've gone from low interest rates to all of a sudden interest rates escalating quite quickly. How did that happen? Well, we had COVID, and that led to the central banks around the Western world loosening monetary policy and dropping OCR rates, and that resulted in a lot of activity. And then, of course, with the logistics challenges or constrained logistics options, freight costs went up, and we've seen inflation start taking off around the world, and inflation is now a real concern for all central banks. And so in response, they've lifted interest rates, and even at the time of recording this, the Reserve Bank of New Zealand's about to make another announcement. So in turn, that has meant that retail rates have increased markedly, and that means that it's harder to get finance, and it also means for commercial investors that perhaps some owners are now in breach of interest cover ratios, which means banks are asking them to resolve that, and that could be by putting in more equity, and if they can't do that, then they may have to sell property. All of that means that we think it's a great opportunity to be in the marketplace looking for opportunities. Now, it could be that we can see opportunities where properties are sold under value, and that's certainly something to consider. But I think more than anything, it's the opportunity to negotiate with landlords and construct or put together deals that are not necessarily that easy to put together when the market is running hot and it's a vendor's market. So right now we think is a great time, a better time than normal, to be launching our first ever growth fund. So how does the Erskine Owen growth fund work? Well, first of all, investors commit to the fund and they sign a subscription form. We are then in the process of looking for properties, and when we find a property, we then call the fund. So unlike perhaps a typical syndicate or a property fund, we don't in the first instance have a property to show you, and because we are getting that commitment, so we're in a position to be able to go out and buy properties and take advantage of opportunities where we might need to act quite quickly. And once we've got that property, we call the funds and we proceed to settlement. And then when that property has had value added to it, and we'll talk about what kind of properties we're going to be adding value to, when that property has had sufficient value added to it, then it'll be sold. The profits will then be distributed to investors who may choose to retain their funds in the growth fund and not have their funds redeemed. So what will the Erskine Owen Growth Fund invest in? Well, we'll be investing in a range of properties across a risk spectrum where we see value can be added. So at the less risky end of the scale are existing properties that are tenanted and have income, where we see an opportunity to restructure the leases, and it may be that the leases are under market value, so the rent is under market value, and we see an opportunity to renegotiate that. Or it could be a property where there's some vacancy, and we can see the opportunity to perhaps renovate the property, attract a new tenant to that part of the property, improve the yield, improve the value. At the other end of the spectrum, we have land opportunities where we may pursue a rural piece of land that we think is really well placed for a rezone, and we have experience in that, and we'll talk about that later. So that could be a longer play where we have to go and get a resource consent and work through a process, and that is more risky, but there is higher return. The benefit of having a range of risk profiles is that it spreads the risk to a degree. Will we take on debt? The answer is more often than not no than yes. So more often than not, we won't be taking debt on. In this environment, it's not that easy to structure deals with debt, and we want to be in a position where we could pick up land, and that makes no sense to have debt on land where there is no income to service that debt. So in the case of land, absolutely not. There could be some commercial properties with revenue where there are tenants paying rent, and so therefore revenue, and it may make sense to have a degree of debt because obviously that can improve the returns on equity. It does come down to financial prudence and making sure that in this environment that we can pay the debt today and based on forecast interest increases as well. How big will the fund be and how long will it run for? There's no specific size limit or dollar size limit to the fund, but what there is a limit to is a time period. So this is a 10-year fund with a 3-year right of extension, and where we would invoke that right to extend is if, for example, we had a property and we're close to a rezone being approved and the 10-year period was upon us, but the rezone was imminent, we would enable us to get that rezone and then sell. Having said that there's no dollar size limit, obviously we can only subscribe funds to the extent that we've got time to do that. So if you were to ask me today how big it would get, I could see it up to 40 million, but obviously it just depends on the transaction that we look at and our ability to get those subscribed. What about the distributions and liquidation of interests? We've mentioned that earlier, and distributions will only be made on the sale of a property. So just to be clear, that we no regular monthly or quarterly distributions. They're only on the sale of a property where there is a profit. That said, like all of our syndicates or funds, each investor, if they wish to sell, they can absolutely do that and put their interests on the market, and we will, in the first instance, promote those to our database, which we have got a really great track record of getting sales for. One of the critical things that people will want to know is, what about the valuation of units? So properties will be revalued in these circumstances. So the 31st of March each year by a registered valuer, and if the general partner, in its professional opinion, so if in our opinion, believes there's been a significant change in value, either due to market conditions or because of changes to the property, e.g. a zoning change, a confirmation of a resource consent where it lifts the value. So in that situation, we would immediately revalue that property and then revalue the shares. So any changes in value will be reflected in the unit price. So what that does is it ensures that the gains that have accrued to existing partners don't get diluted by new additional capital raising. So just to be clear, that means that new capital post a revaluation will be raised at the new unit price. A couple of other FAQs that we think you may have. Will there be a minimum spend for each property? Our target is to not spend less than 5 million, but where we see an opportunity down to say 2 million, we may look at that, but there are obviously efficiencies for us, so we're motivated to not go too small. How big can it go? Well, there is no limit on the spend level, but obviously we need to be able to subscribe that, and so really we're restricted in a practical sense. For properties where there is no income, how will operating costs be paid? Given there's no debt, operating costs should be minimal. In the case of a commercial property with revenue, then most of the outgoings will be paid for by the tenant. In the case of land, there's rates to be paid. That can become a material factor, but what we'll do is raise sufficient funds to cover the forecasted operating costs over the expected holding period of that asset. What's the minimum investment? The minimum investment is $250,000. How do you subscribe? You simply request an information memorandum if you don't have it already, and subscription forms, fill those out and get those back to us. First of all though, we do need to establish that you are a wholesale investor and go through that process, and of course if you're not already AML'd with us, we will need to AML you. So if you've got any questions about the Erskine Owen Growth Fund, we'd love to hear from you. Give me a call or any of the team and we can talk through your questions and concerns. Look forward to hearing from you soon.